To another Monday market update with Kristen Mason Coreas. Last week, you looked at a black screen and I think maybe didn't hear me. I actually did do one last week, but after the fact, it wasn't there. So I'm double checking up here. It does look like we are good this week. So today is Monday, February 24th, back again for another Monday market update. And there's not been significant changes. I can't remember what I talked about last week, but we're going to give you the most current information now. And so interest rates are still near but below 7%. You can see here, and actually we are down a touch from last week and also down a touch from last year. So that's somewhat good news for buyers in the market that we are down a little bit. Now, actually, let me rewind and not ignore the elephant in the room. There has been news out there, and I think maybe I did talk about that last week. There's been some news out there that the market is crashing in the DC metro area. That largely is misinformation. I still am not exactly sure where that information came from, where they had numbers, they had data, but it was not the data that we have, that I have in front of me that I share with you. And so if you do have questions about the actual numbers, the actual data, please reach out to me anytime and continue to watch me here every Monday or sign up for my weekly report, which I send out on Fridays, which is specifically just for the DC metro area. So I will talk a little bit more. I'm going to give you the data about what's happening here, and it is not what you may have seen in terms of what, if you did hear that prices were down 150,000 in the DC metro area and that there were 8,000 homes for sale in the DC metro area, the market is crashing. That is not what we're seeing. Interest rates are relatively stable, so that's good news for buyers. Now, it is true in our DC metro area that we have a lot of people being impacted by what is happening with the federal government. So I will not be surprised. In fact, and frankly, rather is what I'm trying to say, I am expecting a slowdown of buyer activity in our market. So I will come back to that and talk a little bit more about that. But let's look at the data that we have that informs us. So again, mortgage rates are down from what they were slightly last week and hovering around 7% for 5 consecutive weeks. So that provides stability for buyers to kind of know what to expect, that interest rates are not going up and down and fluctuating, which we've seen at other times. So that's some good news for buyers. Although, again, in our area, what's happening with the federal government is not good news and is not stable. So while interest rates are stable, people's jobs are not necessarily stable right now. People don't know whether they're going to have a job day after day in our area and whether they're going to get paid even if they do have a job. So that is what I am expecting to have an impact and probably a slowdown in our area because of those things. But otherwise the news is not scary. Otherwise, there's not reason to panic in what we're seeing otherwise. So the Fed is talking about keeping their rate stable because inflation is still a thing that we're seeing and it's actually starting to come up again. So while at one time we were expecting the Fed to drop their rates and our interest rates to drop, we no longer are expecting that. We are expecting to basically stay relatively stable with mortgage rates moving forward. So the other news to talk about, though, NAHB stands for the National Association of Home Builders. They report a sharp decline in builder sentiment in February due to concerns over tariffs and mortgage rates and high housing costs. And in addition to that, winter storms did slow down home building. That got in the way of builders building. And so therefore, inventory may slow down a little bit as a result of home builder sentiment and home builders building slower or building less as a result of increase in prices. So a limited rebound is expected because of tariffs and mortgage rates. Also here, we do see mortgage demand dipped last week. So this is national. So nationally, mortgage rates, applications for mortgages fell by 6.6% for the week. So that is interesting nationally since mortgage rates have stayed relatively stable. So that's the national news. What I care more about is what's happening locally and hyperlocally. So locally, not hyperlocally, but in the mid-Atlantic region here, the news is that contracts were lower than they were last year, and showing activity is lower for the second week in February and lower than last year. However, new listings are also lower. So again, the news was that everybody is selling their home. Everyone who's getting, losing their jobs are selling their homes in the DC metro area. That is not what we are seeing. And this did give me some concern. And this does repeat, you'll see in the DC metro area data, which I have here. So showings are down year over year by 20% and down 7% week over week for the larger DC metro area. So this is more local than we were just looking at, but that trend is the same. And then purchase contracts also down year over year by 7% and down week over week by 6% in the larger DC metro area. So this is data as of February 16th. So it's a little bit old as I talked to you today. I'm interested in seeing the new weekly report, which I'll get tomorrow, and I will report on a Friday in my email to see if these numbers continue to go down, because they should be going up this time of year. So this could be the start of a turn and the start of a concern for me if I see these numbers continue to go down in the DC metro area. Last week, contracts, or the week before this, contracts were up, even though showings were down. So we are seeing showings down again 2 weeks in a row, but this is the first week that contracts were down. So I want to see if that continues, or maybe it's just a fluke. Maybe it was just 1 week. We will see when more data comes out. Time to contract is longer. That always flips me around. More days on market. So year over year, and just 1 day week over week, average 26 days, which is not a long time. But so that's the median time that it takes for a home to go under contract in the DC metro area. Now, new listings are down. Remember, I said that there's data out there saying everyone is selling their homes in the DC metro area. Everyone's losing their jobs and selling their homes. Well, that's not what the data shows us at the moment. New listings were down year over year and week over week, although active listings are up, a trend that we have seen for basically the entire last year, up by 20%. Inventory is slowly increasing, and we have room to absorb that because buyer demand has been so strong. There's not been enough homes to meet the demand. So we're okay with this number for the time being. Median list price flat year over year and week over week. So that is a trend that I am starting to see. I think, prices are not really going up like they normally do in terms of what I'm seeing so far. For our hyperlocal market, this includes Alexandria, Arlington, Fairfax, and Falls Church specifically. So this is the data that we run, the most current, the most local data. And so you can see we run it here at Homes by Mason from last Monday until yesterday. And so the data here shows us that new listings are in fact up week over week. And that's up by 26.7%. That's normal this time of year. Again, that's not a significant drastic increase. So I'm not yet worried about that number. But in addition to that, frankly, I'm not worried because contracts were up week over week by 12.6%. So this hyperlocal data is normal for right now. We'll continue to watch it and see. Now, the demand to supply ratio here, that is a measure of how many contracts were written compared to how many new homes came on the market, which equals how many leftover homes there are. So 78% is also a relatively healthy number, that there were homes left over compared to how many contracts were written. And so again, right now, the data shows a relatively healthy market, although I'm going to continue to watch it closely and am considering and am cautious that what's happening on the ground, what we are hearing like on the front lines, when I walk the dog and when I go to my exercise class and talk to my friends, what we are hearing is that there is a lot of instability and a lot of uncertainty with people in their jobs who work for the federal government. And that there's also private sector jobs around here. There are lawyers and doctors and people who are not impacted by the federal government. Over the weekend at an open house, I had retired people who are moving up to the area. They already have their house under contract in Florida. They want to move closer to their kid and first grandkid. So there is still going to be homes moving and reasons for people to move. It's just that there is a significant population of federal government workers in our area and people impacted by what's happening with the federal government. So we do need to be aware of that. We do need to continue to watch that. And I will continue to report here on the data shows, the hard data, as well as what we see anecdotally on the front line. So thanks for watching. And if you ever want to talk to me directly, you can click the link below to get on my calendar, or call me or text me at 571-210-1866. That's gonna be the quickest way to get me by that phone number. You can also email me at kristen@homesbymason.com. Thanks for watching. Have a good week, and I will see you back again next Monday for another Monday Market Update.